Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines, and most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And what do I mean by that? I mean, I only talk to transportation professionals. All right. Those are the only people I interview on my twice a week long form podcast, as well as this live show, because I want to put the right information out there that you can apply, utilize, and see a meaningful difference in your business and your life. It's, at the end of the day, it's one of the many reasons why I proudly fly this American flag behind me. A, we're the greatest nation on earth, but B, I'm living my American dream, and I want to help each and every one of you live yours as well. We're going to be rocking another solo show today. We're going to be talking about earning business in any freight market, as well as a couple of industry headlines that we're going to be breaking down. But before I jump into any of that, as always, you guys, I got to give a shout out to my friends over at VHub, vhubapp.com. Whether you're a broker, carrier, or a shipper, we all need access to freight, or trailers, excuse me. We always need access to freight, but we all need access to trailers at some point in time. And the best part, you get paid to move these trailers, you guys. That's right. That's on top of the revenue that you can get by loading these trailers out. So what they're working on right now, you guys, is they have some trailers in Dallas, Texas, needing to get up to Long Sault, Ontario. You get $750 US to do that. They have West Valley City, Utah, going up to Calgary, Alberta, and you get $1550 US to do that. And then they also have they have like 150 trailers in Paragould, Arkansas, getting out to Mississauga, Ontario, and you get 1,000 Canadian per trailer to do that, you guys. So like, you can legitimately, as a broker, getting told we're asset only, this is a way around that. This is a way to work with this. Or if you're a small fleet and some of those larger shippers are like, we need more of an ability to drop trailers, this gives you that right there, you guys. So you can go over there. They don't have to just pick in Paragould. They can go over to Nashville, Louisville, Cincinnati. They just have to end up in Mississauga. So keep that in mind. And then finally, they got a bunch of trailers. They got like 300 trailers out in San Diego, California. And they're going to various parts of the country. They got, going to Houston for $800. They got them going to Chicago for $600. And there's just a bunch of them out there, you guys. So hit them up, vhubapp.com. My man Xavier Campos and Zach Lonergan, Stacy Steen, they'll be in the audience. Just do me a favor, let them know that the Freight Coach sent you. All right. Tracy St. Clair, she's watching over on YouTube. Good morning to you, Stacy. Sunny Sharma, good fucking Wednesday morning, orange shirt gang. Sean Colville, he's watching over on YouTube now, which I'd love to see. Let's fucking go. Hashtag Freight Coach worldwide. Diego Fonseca, good fucking morning. Let's fucking go. David Nelson, let's fucking go. Appreciate the reply. Yeah, man, I wanted to get back to you sooner. I'm sorry, man. I just got a lot of shit going on right now. But yeah, man, I'll be in touch as things kind of progress here. Dylan Turner, let's fucking go, team. Keep it up, Chris. He's watching over on YouTube as well. Cole, what is up, my dude? Morning to you, sir. Thanks for tuning in. Just because I got a couple more messages last night from people who normally follow me on LinkedIn. I don't know what is going on over there, but they haven't been getting their normal notifications when I go live every single day. I do go live every single weekday, no matter what. So if you're having those issues, as I know a couple of people have, jump over to YouTube, you guys, hit subscribe on there, and you'll see me going live on there every single day. I don't know what happened or what's been going on, but that's just what I'm seeing. I know that people are listening still and getting it. It's but I do go live every single day. But if you're having those issues on LinkedIn that other people have had, jump over to YouTube, you guys, and we'll hit that up, because we're not going nowhere. All right. So I want to start and talk about, a little bit of a thought I was having, as I'm going through and prospecting and building out my brokerage, right? Because like, I'm legitimately documenting everything as we go in my brokerage. I'm documenting every step of the way. We're talking about prospecting, building a customer base, building carrier base, building our team out. Once we hit certain milestones in my company, I'm going to have my business partner come on, who is he's the integrator of everything, because I don't write shit down, you guys. If you couldn't tell, I'm one of those guys where I'm a vision guy. I'm an ideas guy. I love processes and everything, but I hate writing anything down. My business partner, he's the integrator on everything, and we're going to go through and talk through a lot of that stuff, because again, I want to put the right information out there for you guys. Let me see here. Dylan says YouTube works. You may need to enable notifications on your phone settings. iPhone, I had to. Appreciate that tip, man. Let me see. John Tay Reed, good morning. Thanks for tuning in. But yeah, and when it comes down to like earning business in any market, because like what we're in right now, you guys, like we're going to see this again, right? Like this market is going to be back. And one of the biggest things I've experienced in this industry is I operate the exact same way no matter what the freight market is. Doesn't matter if it's an up market, down market, sideways market. It doesn't matter what it is. I'm operating the exact same way, because service is the only solution that I have to offer, right? Like I am the product. As a broker, you are the product. And I think going out there when you're talking to individuals right now, when you're having those issues, because I'm getting just as many rejections, right? I'm getting just as many pushbacks, and they're not busy right now. They're not adding anybody right now. I'm getting all of that, but I'm still onboarding customers. And I think like for me personally, it always is going to boil down to this. I know that it takes a lot of effort to onboard a customer, and there's been a false sense of reality out there on it should be easy, and it's not easy. But, for where we are, how you're going to add value out there is, like for the most part, when you're getting started with somebody, price is going to be a thing, right? Like, but you're able to do that. You're able to read freight markets. The more and more you kind of hyper focus in on one area. And again, shout out to my friends over at Green Screens. We're going to be doing that, you guys, like on an in-depth basis. We're going to be teaching you guys how to read freight markets as they go, because no matter what you see out there, you guys, this shit is predictable. All right. Like, and again, this is coming from a guy who went to public school. Okay. Legitimately, we can predict these freight markets on how they're going to trend, because one thing that doesn't change in any freight market is you need to consistently be able to provide accurate pricing, right? And you need to keep your prices consistent. You can't jump up and down, and because the most success I've ever had with a customer is when I kept my rates the same, right? I compressed and contracted with my carriers to keep them paid, but I kept my customer rate the same out there, and that led to more and more business. But when you're just getting in the door with people, for starters, I very rarely sell on price. Like I don't even mention that I can save them money. I don't mention any of that shit. I'm selling them based off of my experience and my experience only. And then what comes about is yeah, the first couple of loads, price is going to be a factor, but it's about giving them a consistent rate time and time again, right? Like if I see that the market is jumping up, or for whatever reason, I'm going to keep my rate the same. I'm going to move it and I'm going to keep it consistent, because for my carriers as well, I'm going to keep their rate as consistent as possible. If it jumps up a little bit, I'm going to pay them a little bit more money. And I think that, because I realistically think the first 20 to 25 shipments you move with somebody is going to be very telling on the performance. And, you're really doing that to figure out how things are going to go inside of that relationship. And, if you're going in there and you're just selling on the fact like, oh, I'm going to try and save you a little bit of money, or I'm going to go do this, or I'm going to go do that, I think that's a losing strategy. I truly do. You need to go in there and sell it based off of your industry experience, your industry knowledge, and your ability to provide consistent pricing in the beginning of it. Because as a new provider, you know what, your rates are going to be a decent size factor that goes on out there. But I think that it's not always going to be that way. So as you're building up your book of business in this market, it's a massive opportunity, because this is the real freight market. This is reality. This is where we are. You're going to see this market more times than not. But B, bring that level of consistency to everybody, whether it is on your outreach, your communication, set that tone right away, your attentiveness, all of that stuff, because, it takes a lot of effort to get in the door, and you don't want to lose it because you know what, you got, I don't want to say you got lazy, but yeah, fuck it. Let's call it what it is. You got a little bit lazy. You took a little bit long, or you know what, you wanted to try and make a little bit more money on it. And I'm never going to sit here and say don't make money, because obviously money is a major component to business and everything out there. But don't let greed cause you to lose business, because if you're the one, I've had so many examples in my career of an opportunity that I had where I could have justifiably raised my price given the situation and the scenario, but I didn't. I kept it the same. And guess what that led to? More freight. So keep that in mind, you guys. That's one of the tips that I can give you for right now as you're prospecting, and you're not, you're getting the rejections, you're going through all of that stuff. I'm going through that too. Is you got to build up that consistency with your prospects and everything. And if you're going to be quoting it out a lot and pricing things out, do your research on it. Green screens, hit them up. Hit up my friends over there. But again, you guys, that's one big component is we're going to teach you. Because that was like a big thing for me, is I want to teach people how to accurately read freight markets. I really do, because it's very telling, and it's not as challenging as you think. And we're going to get into some more of that here coming up. So, all right, let's get into some articles here. Donald Will, ditto. I don't know what that was for, but thanks, man. Alexis Bailey, good morning to you. She jumped over to YouTube. She was watching on LinkedIn. She jumped over to YouTube. I appreciate that. Tony, what is up, my man? Good morning. Thanks for tuning in. Zena, thank you for tuning in. Good morning to you as well. Yeah, I keep bringing that up for people jumping over to YouTube, because there's just been some whatever stuff going on LinkedIn where they're not getting the notifications, and they're able to do that on YouTube. So jump over there if you want. All right, let's get to some articles, you guys. And then, hey, just a reminder, Friday Q&A show. Every single Friday is a sales and operations related Q&A style show for the transportation industry. So if you have any of those questions, DM me or send it, just drop something in the chat and I'll answer it live on Friday. All right, first article we are going to break down today is from ttnews.com. ATA leadership touts win on federal and state levels. Let me see here. The trucking industry is scoring wins on the national and state levels and is hunkering down to tackle issues atop its agenda, adopting a nimble approach that puts the best course to victory at the forefront, and said ATA President Chris Spear at the Federation's annual mid-year management session. They're seeing us involved with the agencies, not just the DOT and the EPA, with the Environmental Protection Agency, excuse me. We're working with our federal Federation and state association executives. They're seeing action in states like California with the Air Resources Board, Florida on lawsuit abuse, and Iowa on lawsuit abuse as well. We are leveraging the entire strength of the ATA's federation to be engaged at all levels, even if that means inverting where ATA is now not leading on the issue, but supporting the state on the issue. So it's caused us to think and act differently. In Florida and Iowa, state association leaders have helped shepherd through state-level legislation that limits the settlement juries can award in lawsuits against trucking companies, and move amid at plaintiffs' attorneys who are prone to seek exorbitant sums in cases where trucks are involved in the accident. A top issue for the ATA is now educating lawmakers about the risks of rushing too quickly. Hold on, I don't want to jump ahead to that. I think that, there is, like, the nuclear verdicts is something that affects our industry at a very high level. It is something that ties into higher insurance rates, ties into a lot of shit. And it's good to see, that there's going to be some lawsuit reform that goes on out there as well. Because it's like, some of these ones, man, it's like a one truck operation. They want to sue for, they're getting awarded $80 million, $90 million and stuff like that. Like, there's no, like, what is that doing? That's not solving anything, because no one's going to get that money at the end of the day. And, there's been a decent amount of fraud cases that were upended in the state of Louisiana alone in syndicated crime rings that were attacking trucking companies out there for insurance stuff. So you can look into that if you want, but that was a pretty big deal. A top issue, let's get into the next one here, is educating lawmakers about the risk of rushing too quickly towards electric and fuel cell vehicles, with Spear noting that the recent decision by California's Air Resource Board to move forward with its advanced fleets regulation is premature. We're not saying no. We're saying we're not the association of no. He said we've got a 40-year pedigree of working with the EPA to reduce tailpipe emissions, to deploy the latest, greatest, innovative available equipment, and they've allowed our industry today to collaboratively to allow innovation and thrive. The CARB regulation will require some motor carriers operating in the state to begin transitioning to zero emissions trucks as soon as next year. The rule was approved despite concerns by some truckers that sufficient numbers of zero emission trucks and the infrastructure required to power them may not be available as soon as required. CARB's goal is to have fleets operating in the state be 100% electric by 2035, 2040, or 2045, depending on the size and type of truck. That the targets that are being put forth are just simply too aggressive. And that's not just coming from me as an association head. That's coming from engineers, the innovators, the people that actually know what it takes to squeeze the blood out of a rock, Spear said. And I personally think, hold on, it goes on to say that Spear stressed that the trucking is committed to moving towards zero emission vehicles, but at a more measured pace. We're committed to that. He said it's just the timeline. The timelines are unachievable, and we do not have the technology available. And even if we did, the deployment of that equipment, the adoption of that equipment just simply would not happen in that amount of time. I couldn't agree more with this. You know, again, like I think, you know, just to put it out there, like I'm all about breathing cleaner air, but the way that this is set up is, you know, and I talked about this, it was either yesterday or on Monday as well. Like it's just asinine, right? Like it's asinine to sit here and say that you need to start transitioning your vehicle when they don't even have the infrastructure in place, right? Like it's bullshit. It's typical bureaucratic politics, pandering to their base and everything else. And then nothing, you know, it's just setting us up for a catastrophic failure. That's what it is. It is a catastrophic failure, and it will legitimately put so many small businesses out of business. I can't stand behind that at all. Again, here's my honest stance on this. If you want to buy an electric truck and an electric vehicle, fucking go ahead and buy one. I shouldn't be forced to buy one or operate in that capacity because I don't want to, right? I should be able to by choice, not by the fucking big brother coming out here and telling me you have to be electric. You have to have that. Fuck that. Fuck that. That is, I couldn't disagree with that statement more. If you want to drive one, fucking drive one. That's your choice. But don't force me to do any of that stuff. Let me see here. All right, labor front. Obviously, they're talking, you know, because there's still a lot of stuff that's going on the macro as a whole on the labor front, like the ports and everything, and then the Teamsters and everything. Which again, I'm not going to get into my stance on unionized labor on this. You can go back and listen to some of my past episodes on that because it is what it is. But, you know, again, this was a good article. And I think that, you know, I know people's opinions on the ATA and the TCA might not, you know, jive or align or whatever you want. But again, it's good to read counter arguments to what your thoughts and beliefs are. And that's what I really want to do a lot of the time here is I want to read articles. I want to put out information that don't necessarily align with my thought process because, again, somebody's got to, you know, we got to put it out there and we got to listen to it. And, you know, again, what they're saying, though, there is a lot of validity. There's a lot of good information in this article. So ttnews.com, ATA's leadership touts wins on federal and state levels. And personally, I'm a big fan of Chris Spear. I like him a lot. I've seen him. I've had him on my podcast. I've seen him talk a few times. He's a good person. He's a really good person. And I'll put the links to all these articles up on YouTube and the Coffee with the Freight Coach audio only replay of this, which will be up almost immediately after the show. All right, this next article This one's from my friends over at the JOC. Top U.S. shippers. Price inflation pulls the plug on surging electronic imports. This is from Bill Cassidy. He wrote this one. U.S. consumers dialed back demand for electronic imports last year amid growing concerns about the U.S. economic outlook and the worst price inflation since the 70s. Containerized imports of television, mobile phones, computers, gaming consoles, and a variety of other devices and gadgets sold under the electronic banner declined 2.1% to 1.66 million TEUs in 2022. And that decline, however, followed a 4% increase that boosted electronic imports to a record high of 1.7 million TEUs in 2021. Last year's dip in containerized electronic imports, although more of a small step down from the top of a tall staircase than a head over heels fall, is a sign that the U.S. consumers were holding back on some discretionary purchases, including higher cost volumes after the 2 years of heightened spending that was out there. The monthly U.S. inflation rate averaged 8% in 2022, rising as high as 9.1% in last June. From 2015 through 2020, inflation averaged 1.5% on an annual basis. Unadjusted price inflation was up 5% year over year and 5.6% year over year. Food prices were up 8.5% on average as well. The reason I thought that this article would be very relevant, out there, you guys, is because like when you're seeing freight volumes change and dip and stuff like that, it says like what stopped shipping, right? And I think like as we're out here going in and you're looking at a lot of the freight that's moving out there and kind of like what to prospect. So, anytime there's a recession, anytime inflation starts to spike, what do people scale back on, right? Like, I'm not going to go out there. Well, this is a bad example because I did just buy one, but like, I'm not going to go out there and buy fucking 6 TVs, right? Or that's not going to be at the top of my list. I think when inflation hits, when a recession hits, people shift their spending to necessities, right? So you want to think about it like this. What are you always going to buy? And if this is where you're at and you're looking to like, all right, what can I prospect right now? That's where your focus should be is what are the necessities inside of your home that you are going to purchase no matter what? The survivable things, you need your food, your water, your fucking cleaning supplies, deodorant, shampoo, stuff like that. So look at it like this. If you're sitting there thinking to yourself, like, how do I prospect? What do I even go after right now? That's a place where I would start if I were you, is I would look at it like this. Who knows how much longer this is going to go on for? No one can accurately predict on a macro scale what the U.S. economy is going to do because like you're going to hear 87 different opinions on it. So again, what can I do today for my business is I would look at it from that perspective. What am I going to buy no matter what? That would be an area that I could prospect if you're looking for where can I start. Let me see. It goes on, like during challenging economic times that electronics do tend to perform well overall. Despite near-term headwinds, consumer electronic sales will remain above 2019 levels. And industry averages are expecting to grow at the end of the forecast period in 2025. And then lingering supply chain disruptions, they're talking about labor shortages, and then, the amount of layoffs and stuff that have been out there in the industry as a whole at multiple different companies. But yeah, it's, and then just to end this article, it's mainland China's share of containerized electronic imports fell 50% last year. And then Vietnam picked up most of the slack, increasing its share of the market to 12.8% from just 3% in 2018. Taiwan, one of the world's largest semiconductor makers, is expanding its production in the U.S. with plans to spend $40 billion on 2 U.S. sites that will begin production in 2024. And then we're all in on the largest customer for TSMC in Arizona. Shout out to Freight Valley, dude. It's blown up out here. I will say this. But that article was from the JOC, and it was the top U.S. shippers. Price inflation pulls the plug on surging U.S. electronic imports. And again, I bring that up, you guys, because, as you're starting to see the global supply chain shift, right? Like, yes, China's always, for the most part, going to be a thing, but people have shifted to nearshoring down in Mexico. They've shifted to other countries in Southeast Asia and everything as well. So it's interesting to see where things are going, but it's also interesting to see that people are still spending money and stuff out there. But again, I brought that article up because I wanted to let you know, from that standpoint, what are your necessities that you're always going to have in your house? And that would be a good place to start if you're looking to build your book of business. All right, next article, freightwaves.com. And we're going to end it up on this one. It's flatbed carrier Dasky says no clear visibility into recovery. They pointed to a lack of seasonal uplift as the basis for lowering its full year outlook on Tuesday. The company reported first quarter adjusted earnings per share of 12 cents, which was double the consensus estimate, but half the year ago mark. Following the end of the quarter, the company repaid $50 million in debt and redeemed $20 million in preferred shares. Those actions are expected to contribute 11 cents in adjusted EPS annually. Net interest expenses was up $4 million. That was out there. And that Dasky reeled its guidance says there's no clear visibility into a recovery, and it is no longer expects a seasonal lift in freight volumes in the spring-summer timeframe. Revenue forecast to decline 5% year over year during 2023. Adjusted earnings before interest, so EBITDA is adjusted earnings before interest, taxes, depreciation, and amortization is now forecasted to range between 210 and 220 million versus year over year from 235 million. And there's a lot of data points that we're looking at. We're just not seeing the seasonal uplift, said CEO Jonathan Shepko. I think, and then again here, it goes on to say that their specialized unit reported a 2% increase that was out there. And the company's general flatbed unit recorded a 13% year-over-year decline in revenue to $169 million. Freight revenue was down at just about 8%, but brokerage revenue fell 43% as the company took higher paying loads from its brokerage business and moved them on its own company equipment. And then let me see here. I think that's a good thing to point out. What a lot of the large carriers are that they do, and if they own a brokerage or they have a brokerage and they're operating one in between, I think it's very common for them, if their brokerage has a higher rate, that they'll just tender it across the board to their asset. And again, I would do the exact same fucking thing if I was in that situation as well. But that's one thing that happens out there. So yeah, it's I think personally the flatbed market, because this is all I do. I do flatbed, I do heavy haul, I do open deck, I do heavy haul, I do specialized freight and stuff. And from what I'm seeing out there is rates are very consistent right now. And they're staying strong, right? They're staying across the board where there's no real seasonality that's hit yet. That might pick up a little bit later this year, June, July, because it really flatbed season starts to kick off in late April, kind of like when the snow thaws out. But I'm seeing that the volume of freight that's moving right now is it's very consistent to how it's been in past years, subtracting the massive boom of the last 2 years. But I think it's very much in line with how it normally is. Normally there's a little bit more spot market activity and stuff like that, and opportunities that are out there, but freight's still moving, right? Like, I haven't had a shipper of mine say that we just don't have anything at all. So I think that that's a good sign. And I think that the flatbed market's going to remain strong. I think it's one of the least volatile I think, dry van and reefer are the most volatile freight markets that are out there. I personally think flatbed is the least volatile overall. And that's why I work in the flatbed market like I do, is because of that. But yeah, that article, freightwaves.com, good article from Dasky, which is a really large flatbed carrier that's out there. But that is going to be it for today, you guys. Thank you guys all so much for tuning in. All the links to the articles will be posted up there, as well as the audio only replay. And as always, you guys, if you guys saw value, subscribe and share the show. Rank the show, get it out there. That's how we are the top podcast, is because of each and every one of you who subscribe and share it out there to your network. Because if you guys see value, your network's going to see value in it as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.